right, everybody, welcome back into Mining Stock Daily in this week's long-form episode on the podcast. Back in studio this week after last week's long week from the Beaver Creek Precious Metal Summit. And we're going to kind of debrief, with Rob Sinn, CEO technician, on some of the kind of the highlights, our own personal highlights from Beaver Creek, the Precious Metal Summit. But before we get to that, we also talk a lot about this week's 50 basis point cut by the Federal Reserve and the market reaction, specifically in gold and other precious metals markets. So very interesting conversation with Rob. And then we have a second segment, actually, and one I've been holding on to. Happy to bring in my conversation with Dave Lotan, the chairman of Aurion Resources, and kind of providing some insight into the latest developments up there in Finland, what's happening on the ground, what's not happening, and for the shareholders and just people following that story, it's incredibly insightful. Special thank you to Fireweed Metals, Arizona Snow Copper, and Visa Silver for their continued support of the podcast. And as always, if you wouldn't mind, hit that like, share, subscribe on either the YouTube channel or on the podcast network you get this podcast and all of your other content. We got some big news coming up, by the way. Clear Commodity Network, it's coming. And I'm telling you, you're going to be pleasantly surprised, and just want to get this on your radar, because in a couple of weeks, we're going to be launching something a lot of really fun and exciting. I think some people are going to be pleasantly surprised and happy that it's happening. So just stay tuned. Clear Commodity Network. All right, it's coming. I'm telling you, I'm really excited to be launching this thing. All right, everybody, here's my conversation with CEO technician Rob Sinn, followed up by Dave Lotan. Be well. All right, well, CEO technician Rob Sinn, welcome back to Mining Stock Daily.
Thank you. Thanks, Trevor.
Are you fully recovered from the high altitude Beaver Creeking?
You know, I'm really not.
Me either.
I'm really not, and I'm flying to Vancouver tomorrow. It's crazy.
Oh,
I just not stopping yet because I present at NIF on Saturday.
Oh, very fun. That's great. Well, this, obviously this is going to air Friday morning, just in time for my my Huskers to take on Illinois Friday night. So hence the got to rep the alma mater. You got to rep the hat.
Friday
we got a
night
team this
football.
year, Rob.
Yeah,
that's right, man.
Good quarterback.
Yeah, he gets a lot of pushback because he's got the Mahomes lookalike. But,
Mahomes 2.0.
He can do whatever. We could take Mahomes 2.0. As a Broncos fan, I despise Mahomes because he always beats us. But if 2.0 wants to play quarterback for the Huskers, I'm happy to welcome him with open arms.
That was a great win over Colorado. They really crushed them, and I heard you were at the game.
I was at the game. Yeah, it was loud. It took me a couple days to get my voice back. But all right, well, let's enough of that. I could spend a whole hour talking college football right now. But let's talk markets. There's just a few things that we could cover here, Rob. But I think most importantly, we got to get some discussions here on the rate cutting of the Federal Reserve's rate. 50 basis point cut we got this week, and Jerome Powell comes out there, and let's maybe talk about the implications of 50 points. Were you at all surprised to get the 50 instead of the 25, and kind of your general thoughts of where we're going from here?
Yeah, I was calling for 50, but even up until the last minute yesterday, I wasn't sure about it. I felt like it was like a 60-40, 65-35 kind of call. It felt like it was the most uncertain Fed in years. But when the 50 hit, I was like, wow, okay, they did it. They did it while saying the economy is still strong, while talking positive on everything. He really tried to couch it as, we're doing this not because the economy is weakening, we're doing it to keep the economy strong, which I think there's half truth there, and then half he's putting a good face on it. First of all, the Fed never cuts 50 basis points when they're not worried about anything, right? The 50 basis point rate cut has historically been for a recession, 2001, 2007, 2008, 2020, right? Um, so they're concerned about something. And I think the employment trends are pretty clear, and that's what they're concerned about. But I also think they realize that, okay, 3 month core CPI on an annualized basis is 2.1%. So we're up here at 5.5 on the Fed funds. The 2 year telling us we should be 150 basis points lower. Inflation is no longer the concern it was in 2022 and 2023. So we need to get this thing down. Um, and we need to get it down to 4% fast. And then if inflation does rebound, well, then we can recalibrate again. Like that was the word we used yesterday, recalibration. We had to recalibrate. And I think what recalibrate means is just we were way too freaking tight, and we're seeing some cracks start to form, and we don't want to make policy error here. So they went 50. My question is, how do they step down in November 25 after going 50? If the data continues to soften, it doesn't have to soften a lot, but if the trend in the employment data just gets a little weaker, if we see keep getting 100K prints on the NFP, then how do they step down to 25 while starting at 50? So I think they're in a bit of a pickle here. And even though the market seems to think 25 is what they'll do in November, I'm going to bet on 50 again.
Really? He came out there and said, basically said that the 25 basis point would probably be whatever in line with the next one. But 50 basis point, I mean, you're talking that'd be a hundred point cut in 2 meetings. I mean, that is recessionary moves. But we're here talking about a strong economy here. Growth is no longer a problem. It's no longer a concern, Rob. 2 weeks ago, growth was a concern, but now it's not. Now I have to. The other side of that sword is okay. If we're talking 100 basis points in 2 meetings, is inflation back on the table as a concern?
I don't think inflation is back on the table in 2024 as a concern, but it could be a 2025 story. That definitely it could be a second half of 2025 story. And the market's going to be getting ahead of the things 6 months in advance. Just like gold got ahead of this rate early in the year, it got ahead of it in April, right? So we'll see the market start to factor in, if inflation does indeed start to rear its head again. But the trends on inflation are so strong right now, and I think we're going to see rents continue to stabilize and drop. Mortgage applications are through the floor, so they part of their calculus, I think, in lowering rates is to keep the real estate market going again because it's totally stagnant. It's like depression level. I have some friends who are realtors. This is the worst year of their career, right? So there are so many disconnects in this economy that, like, Nvidia is $3 trillion and all these tech guys are making billions. Yet people in the real sectors that create real things like houses and housing are suffering really bad. The CRE market is well, it's brutal, right? So there's a big dichotomy in this economy. This is uncharted territory. There's a lot of haves and there's even more have-nots.
I don't know if any of this should be at all surprised. I mean, I guess we shouldn't be surprised that we're now sitting in this very volatile economic system because we printed trillions of dollars a couple of years ago, and I think we're finally starting to see that money kind of start to come to some roadblocks, and obviously it's going to hit lower income individuals from the get-go. We're already starting to see that, right? I mean, just it wasn't too long ago, Dollar Tree just had an abysmal earnings. We're seeing a lot of retail and just like convenience stores and their earnings saying people are, there's little micro things, going for the cheaper type of products rather than buying the more expensive stuff over the shelf. I mean, so these little stories are like starting to kind of fit together. We're seeing higher end consumers kind of forego the luxury brands and start actually heading towards the Targets and the Walmarts, right? And so things are like certainly shifting, but it's kind of like steering the Titanic in a way. Nothing's going to just crash tomorrow. But I think it's obvious the Fed and Jerome Powell are seeing this happening in real time, and they're trying to get ahead of it as best as they can. Uh, and I don't know, maybe they deserve some kudos for actually trying to do this before things really fall apart, because that's usually the MO of the Federal Reserve, is to be too late to make these types of decisions. I don't know, time will tell. But it certainly seems like if they're making a 50-point cut and potentially another 50-point in November, like, can we just ring the bell that recession's here? Can we just like stop arguing about it and claim the recession was here in October in
I
August?
don't even know what the definition of a recession is, but I
Well, they
think
keep
there's
changing it.
probably,
They keep changing it, Rob.
I will say that there's a recession for 80 to 90% of the US economy. So whether or not, Nvidia and Google and Meta can outweigh all of that, in the bigger picture, in the whole pie, I don't know if it matters, because if you look at 90% of the pie, it is in a pretty steep economic downturn. And credit card debt, all-time high, savings rate, record low, U.S. federal budget deficit, 2 trillion and growing. August was a record monthly budget deficit for the U.S. Uh, the amount of interest the U.S. Treasury is paying on the national debt is topping 1 trillion annually now. It's only going to go up further. Some rate cuts are not going to change that mathematics, anytime soon, right? So, if you look at like a chart of 10-year real yields or even 10-year nominal yields going back 25 years, when they raised to 5.25 in 2006 and then started cutting in 2007, well, that was a sign that the economy was going into a downturn, that rates were going to head a lot lower over the next several years, and that gold was going to do a 3x or a nearly a 3x, in the next 4 years. Same thing happened in 2018. They tried Powell tried to tighten a little bit in 2018. The market had a complete freak out at the end of the year. He pivoted and said, no, we're not going to hike. And then he went to ease it in 2019. We know what happened in 2020. And we know what gold did between August 2018 and August 2020. It went from 1167 to 2089, right? So, yeah, sample size of 2 is not um, very big, but it's over a pretty long time frame. And Federal Reserve monetary policy is like an aircraft carrier, right? It's not, it's going to turn, and it's going to take a long time to turn back to sort of the mean. And so I think there's a long way down to 3% on the Fed funds rate, maybe even lower. Um, and that's just I think it's rocket fuel for gold. To some extent, gold has priced some of it in for sure at $2,600 an ounce, but I don't think it's priced in the whole move. And when Western investors start piling into ETFs, start buying more physical because they see what's happening, um, on top of all that emerging market central bank buying, I I haven't been one to throw the $3,000 number out ever previously, but like my price target's been 2,700 for the last couple of years. But
Mm-hmm.
I think 3,000 is possible now. Um, I mean, I don't know if
Mm-hmm.
it's probable over the next year, but it's possible.
Well, 3,000 on the table. I mean, I'm not at all going to argue with you, be quite honest with you, because I think I fully agree with you. But speaking of gold, let's talk about the initial market reaction yesterday. Once the announcement came at 2 o'clock Eastern time, everything rallied. Gold made a new all-time high intraday. Once the press conference started with Mr. Powell, everything retreated. A little bit of whiplash in the markets, and most everything was down. But here we are. Futures went sky high. Gold's back up above $2,600. It hasn't touched that all-time high it did intraday yesterday, but still kind of a strong rebound move. The Nasdaq's up over 2.5%. The S&P is up over 1.5% as we speak here Thursday morning, Rob. And it sounds like it kind of feels like animal spirits are back. I mean, they were unable to kill the speculative casino that is the stock market anymore.
Yeah, I mean, when I was contemplating the 25 versus 50 thing, the one thing I kept coming back to that might happen just to 25 was if they go 50, they're going to uncork the animal spirits in the stock market. And, Wall Street's just going to get way ahead of itself, pricing in more rate cuts and just run this thing up, to 6,000 S&P in a couple of weeks. So that concerned me, but they did a clever thing with the SEC where they basically said, nope, we're going 25 and 25 last 2 weeks a year. So don't count on any 50s. And he talked that down as well during the press conference. So that was clever the way they did it. I think they probably did it perfectly, but still, yeah, we had to sell it on years because it was so front run, but here we are, back up again. And that was sort of my take, with gold yesterday. It got up to 26, 25 on the futures, and then it slammed down $50, into the close. And I was like, you know what? I think you buy this dip, even though it looks like a failed breakout, it looks like a big red candlestick. I think you buy this because in Asia overnight they'll digest the news and they'll buy gold, and then they'll buy it in Europe, and then people will be like, yeah, like why didn't we sell gold yesterday? Um, but certainly there is some digestion around this 2,600 level. I mean, it's a big level. We've never been here before. It's a round number. Um, Certainly, to some extent, the futures are a little extended. The large speculators are pretty heavily long here. Um, so this is not the kind of thing where you bet your last dollar on more upside in gold in the near term. Um, but I continue to think that dips will be bought, just like they appear to be here this morning.
All right. What about a catch-up scenario with silver? It's also rebounding here Thursday morning, but it's kind of that $32 per ounce level. I mean, it's just kind of recent resistance, I would say. But, it certainly feels like silver has a long way to go if it is going to kind of start catching up to its older cousin here.
The silver weekly chart is a beautiful thing. It's really textbook stuff. It's beautiful chart patterns playing out kind of according to the textbook, which we don't see that often anymore in markets. Usually there's all kinds of
Mm-hmm.
failed patterns. Um, but just keep it simple, stupid. Silver went up to near 33 earlier in the year. It pulled back to major support in the 26s, took out a lot of people, and now it's back above 30. Um,
Hmm.
the trend is up. The trend is up. I love silver here, and there's some charts being thrown around about Chinese consumers buying silver. I mean, you actually have to look at the dollar amounts. Like they bought like $100 million of silver, which was like a big deal because uh, Chinese weren't really big buyers of silver previously. But for some reason, in the last several months, they've decided that they wanted to own some silver. But the actual total numbers are still pretty small.
Yeah. Okay. Um, So initial market reaction, and actually some of this has been very friendly to our favorite mining plays, right? And so let's maybe get a little debrief here from a long week in Beaver Creek, and that probably what is probably one of the best, if not arguably the best conference in the entire sector every year. As you know, we were just gung ho 40. I think it did about 40 interviews over 3.5 days. So we were awfully busy, all corporate and company updates, and trying to get some news stories in there as well from some familiar faces. But it was all this was taking place at the time gold was making a new all-time high, so that was fun to watch. But it was kind of one of those things where you could tell companies that were going to be immediate benefactors of this bull market, and some companies that were going to either have to wait or maybe shouldn't have been there in the first place. But yeah, debrief, Rob. Like, what general takeaways from last week?
Yeah, so my general takeaway is that it was a busy conference. The junior mining sector is evolving, changing a little bit. I think this is a very different conference from 2019. I remember the 2019 conference 5 years ago, and you were at, um, there was one camera, I think. There was one camera, and that was out in the kayak somewhere. It wasn't in the main the hallway. Um, Now there's lots of cameras, lots of people doing video interviews, lots of people doing interviews, period, setting up little, impromptu studios outside. Um, yeah, so there's a lot of media now into your money. The meetings were slammed. People had full schedules. I tried to not take offense. A couple of companies didn't schedule meetings with me. But then I heard that they didn't schedule meetings with Tack or Barrett because they were already full for whatever reason. They yeah, anyway. But I was busy anyway, and I was happy to have a little bit of free time. Quite frankly, it does get a little grueling. As much as I love junior mining, and as and as well immersed I am in the sector, I'll be honest, 4 days nonstop talking about this stuff. You get a little boring at the end, and you just kind of need to come up for air and think about, the flowers or, football or something. But overall,
There
I
you go.
felt like the sentiment was pretty good. I wouldn't say it was euphoria. I would feel it was optimism. It was like early optimism, and it was kind of surreal to sit there in those meetings with gold going up 25.50, 25.60, 25.70, 25.80. And a lot of these companies, their pricing is not moving or there's no volume in them, right? And God forbid
Hmm.
some of them might have gone down and still had a big week last week, right? So there is this disconnect still. Um, and sort of one of my themes is that, we're not at the junior stage yet. We're getting there. We're at the, mid-tier stage. We've seen some great performances and some of the, mid-tier gold miners in 2024. The seniors have generally done very well as well, but only the cream of the crop juniors, and the ones that are on the NYSE or something have had doubles in 2024. And so for the venture companies to get in the ball game, um, we need to see more M&A, which I think is starting. I feel like there's
Hmm.
going to be some deals announced on the back of this conference. I feel like there was some deal making going on there. So over the next few weeks here, some of the fruits of that conference, and when people ask, like, what's the point of everybody going to Beaver Creek, Colorado for a week and talking to each other? They can just do Zoom calls. Well, I think the environment creates a bit of urgency, and it creates the lubrication that you need for deals to happen, for things to happen, for people to see opportunities that maybe they couldn't see from their office or their home office, right? And so I think it's a good,
Yeah.
I think it's generally a good thing to attend these kinds of conferences. So yeah, I mean that's my general takeaway from it.
All right. If I would say my takeaway here, it's nice to see familiar names in new places. We had a great conversation with Hayadon, who's now, he's back in Namibia, obviously, but working in copper. That's a fun story to watch with Corex. Duncan Middlemiss, now with Arizona Metals, I believe it is. I had a nice conversation with him, when he was CEO of Wesdome, the last bull market, Wesdome was a high flyer when gold was making that run up a couple of years ago. And there's others, and there's others that, the one I was going to say, like I was really taken away with, Ivan Bebek and the Copernico project, or the Copernico's project Sombrero. I mean, Ivan's back, a serial entrepreneur, serial explorer, set up to kind of hopefully make a new discovery, meaningful discovery. Great conversation with Dustin Perry up in Kingfisher, trying to do everything right to make a discovery up in the Golden Triangle. So there are like new, exciting early exploration stories. And I'm not saying that they're going to get the love immediately because that's just not the market we're in. There's not that speculative money throwing into companies, pre-discovery. We're just not there yet. But I think as this thing continues to build, some of those stories are going to gain traction. And we saw what discoveries can do in a bear market. I mean, think about how many, copper, gold, porphyry discovery hits like sent market caps 3-4-fold, right? And that was in a bear market. What happens if those discoveries are made in a better market? So I think the setup in general, the setup is really good for explorers. Right now, it's still going to be tough. You kind of have to have a resource. You have to have good projects. You got to have things de-risked. You have to have multiple assets. And so for those single asset explorers, like the market's not there now, but I think the setup in the months and maybe even year or two to come, Rob, like, hold on, man. It's like, I think it's really exciting. It's going to be a grind, but it's going to be really exciting.
Yeah. The Sombrero porphyry targets there, that you mentioned are pretty compelling. I mean, that's like, I'm like a kid in a candy store when I see their maps and and their graphics.
Yeah.
It's pretty impressive. Meeting with Snow White, like their team was really good. Like the top dots, like Scott he's very polished in his responses and how he frames the opportunity here. Yeah, Banyan Gold Tara was absolutely tireless, and she's so committed. Like you get her talking, and she'll just keep going about why this is a fantastic opportunity, and Banyan, and why there will be consolidation, in the Yukon. And then there were some companies I didn't get to meet with, but I heard they were very active. I think maybe we'll see something happen in BC. Um, there's some consolidation there, you know, with Ascot, whatever is happening, with them. I feel like there could be something on the table there because they sort of put the mine in care and maintenance, and we'll see what comes of that. Yeah.
Yeah. All right, my friend, let's leave it at that. I'm sure I'll be texting you back and forth this weekend throughout football. Actually, I'm on a plane on Saturday, so maybe not so much, but appreciate your time. And it's good seeing you in my neck of the woods in Colorado last week. And, go get some rest up and, come back down to ocean level.
All right, too, but thank you so much.
Thank you. All right, that's Rob Sinn, everybody. And we're going to take a very short break. We got Dave Lotan from Aurion Resources on the next segment of the long form, and it's an important conversation. So stay tuned for that. All right, you've approached the part of the program where it's no holds barred because we've got our good friend Dave Lotan here. You never know quite what Dave's going to bring to the table, but I promise you, the first part of this conversation, we're going to get an update from Aurion Resources, which obviously he's a part of. They do trade on the TSX Venture with AU and on the OTCQX with AIRRF. There's exploration news out of the Risti property that we're going to hit on, and obviously I'm going to talk to him about the latest updates regarding a deal that is not done. There is no deal. We're going to ask him why, and then we're going to talk about a little bit of the markets as gold's hitting a new all-time high this Thursday morning. So Dave Lotan, my friend, it's good to see you.
Hey Trevor, how you doing?
I'm
Great
good,
to see you.
man.
Thanks for having me on.
Yeah, no, it's good to have you. I always look forward to our conversations, whether they're on or off mic, I might say. Okay, let's talk about some exploration here. You put out some really high-grade results out of the Karaselka project. I apologize for the pronunciation if it's way off. Highlight was 3 meters of 29.1 grams per ton gold. I think that's some of the highest grade, if not the highest grade you've ever drilled up there, eh?
Yeah, I think the last really good high grade interval was 6 meters and 17 grams, and there might have been something up to 90 grams in there, but that's a property that we barely tickled. It has lots and lots of potential. Obviously, given the situation that we were put in after PDAC this year, we've been really, really careful about the capital that we were using. There was some discussion given that there were some tactics around the situation, and I think the counterparty was interested in our balance sheet and how much room we had to run. So it was a very considered decision making another investment at Karaselka, but we really feel like that property can advance in an impactful way with very modest investment, and we were pleasantly surprised to expand the mineralization another 100 meters to the west and to open up a whole new structure with just a couple of thousand meters of drilling. So that, now that we're better capitalized, is something that we'll follow up on as soon as we get a drill back on the property, and we're quite excited about that. I mean, the reason that we had to move off Amarusco was to some extent cost with a fly rig and not being able to fly helicopters in darkness. But once Ikari was discovered and it drilled out to 4 million ounces and only 36,000 meters, it made it clear that we needed to look in a different host rock for mineralization that would drill out more efficiently. Karaselka has all the ingredients to be just that, but we're early on that structure, and I think it's got all the potential to grow and grow for modest capital investment.
Okay, you did do a financing here with your friends from Kinross.
We did.
$9 million Canadian. That's a good amount of cash here to continue drilling Karaselka. So you're not drilling, currently not drilling. Is there more assay results still pending that need to come out?
Nothing coming back from Risti.
Okay, all right. So when do you kind of lay out the groundwork for work here moving forward in the next season?
I think that, again, the situation that we were involved in, the situation that was delivered to us in March, required us to think very, very hard about how we were going to spend money this year. And there is some residue of that situation that remains. And so we're thinking about that, and we're thinking about how to make the company more valuable as quickly as possible, or for as little capital as possible. And but I, as I said, we're working to get a drill back on that property now. But obviously, once we got those holes in, and given the situation that we were in, capital conservation was the most important thing. Yeah. So once you break those arrangements, it can take a couple of months to get them back in place. So,
can you, if you may, oversimplify and indulge us with the information you can, the options you have at the table right now?
Let me answer a different question.
Okay. That's unfair, Dave. I'm the interviewer.
So we, over the past few years, have been putting money into the joint venture property to maintain our 30% interest in that, because we believed that property would come in, that asset would come into play sooner than the rest of our portfolio, because of course it has some strategic importance to the consolidation of the camp.
Right.
And as a result of putting substantial capital not just into the property but into buying back the royalty on the property and the royalty that it could have cross-infected the neighboring property if there had been an arrangement to put those properties together, we've sort of starved our 100% owned ground of capital. There's many targets. It was a $200 million property at one point when we were able to solely focus on it, and we made a decision to pivot off of the high-grade discovery we made at Amorusko because we thought it might be, Amorusko is one of those typical Abitibi-style high-grade opportunities. It's way out in the ninth standard deviation in terms of how frequently you hit and the kind of grades you get, and we love that property. While that property was developing, Great Bear was happening in parallel. Chris drilled 400,000 meters there and never produced a resource. Amex was drilling Perron for 4 years before putting the resource out that they just put out. And Wallbridge Mining was attacking its opportunities with hundreds of thousands of meters. And our thoughts about how you build shareholder value don't involve going after targets that are that drill intense unless your stock price is at an appropriate level, unless your cost of capital is works for that. And so when, for instance, Chris drilled his first holes at the Dixie Hinge and then got Rob McEwen into Great Bear in a pretty good market, the stock raced up to $5 or $7. They raised flow-through money, I think above $10 at one point. And the Dixie Hinge proved not to be the discovery. Some friends of mine at a big company that might have taken them over pointed out to them that they should pivot down to the bigger structure. That's where you get, ounces in bulk.
Right.
And because they were able to raise tens of millions of dollars for minimal dilution, they were able not just to attack a whole new exploration target, but to do it with substantial amounts of meters. And so that situation may arise again for Aurion. Who knows, maybe we'll even end up with some non-dilutive capital in order to pursue that opportunity. But for now, we have a fantastic new showing at Karaselka, which seems to have the kind of efficiency, not exactly the kind of efficiency that Ikkari has displayed, but multiples of the efficiency that we had at Amorusko. And so we're excited about that. The first 10 holes into Ikkari generated $800 million worth of market cap. The drill core at Karas looks exactly like the drill core that has come out at Helmy that we have with B2, and very much like the drill core that's come out of Ikkari. So I think that's the question I wanted to answer.
Okay. Well,
how does that work for you?
That sounds great. But now I'm going to rephrase my own question from a few minutes ago.
Right.
Did you elect to not exercise your right back in May?
Right. The Roper.
Because you didn't feel like you were going to get that exploration upside with what you're trying to drill out with.
So to exercise that right of first refusal, we would have had to raise $120 million. When we got the right of first refusal, we had a market cap of about $60 million, maybe 70. I can't remember exactly what the number was. And we had another option, which was to borrow the money from a bigger company and flip the stake to them. And the third option was, of course, to not exercise and invite Rupert in as our new partner. And that decision hinged on our own assessment of whether or not a layback could be had as a result of being the operator of that partnership. And our determination was that it couldn't be had, and that and that there would have to be a commercial arrangement with us in order to facilitate that. We took that position, and I think that the other guys agreed with that position. And as a result, many conversations were had over the course of the 60 days that we had to exercise, and then over the course of the 60 days that they had to close. And I wouldn't say for sure, but I'm fairly certain that part of the thought process was that we didn't have a great balance sheet, and that we didn't have a lot of time. But after 60 days, the right of first refusal was going to be returned to us, which is not a typical situation. While the deal didn't close, it had more to do with Rupert's balance sheet. They were down to $19 million in the bank for an $800 million market cap. That's a real dangerous situation. I think we thought they were burning $7 million a quarter and maybe more, I don't know. And so for the right of first refusal to come back to us for 2 months would have been potentially difficult for them to finance.
Yeah.
So I think everyone, frankly, was grateful for a pause. They went and raised a year's worth of money. We went and raised more than a year's worth of money.
Yeah.
And all of the information that has come to light is there and can't be walked back. So,
is this situation an overhang on the stock and maybe overshadowing these great drill results that you put out?
I think that investors had expected a conclusion in 2 months or 4 months. And I also thought that there was a likelihood that the process would resolve itself by month number 4. And I think that, there's certainly been some propaganda out there. And now we're at Beaver Creek and meeting with investors and meeting with lots of corporates. And I think the interesting thing, of course, is that in the Rupert financing, their strategic Agnico chose not to participate. For an asset of this quality, that's really an incredible shock. They gave up their pro rata right to do that, so now they can only participate up to 13% of future financings. This is said to be one of the best assets on the planet, and I agree with that. But of course, it has constraints that need to be dealt with, and then it appears that Agnico didn't vote their shares for the board, and then James has stepped down as the CEO, and I don't know if there's a relationship between those two things. And of course, millions of dollars of insider selling last week, so it's the dominoes continue to fall, and I think let's just we're interested observers,
yeah.
And I think as we have always said during the process, happy to be helpful in a manner that is appropriate for our shareholders. So we'll see what happens. They've got to do a pre-feasibility study and all kinds of other stuff. So there's a lot of gravity, a lot of momentum, and a lot of inertia, a lot of different forces being applied here, and time is never infinite.
No.
For development companies.
Especially this week. Listen, we only got a few minutes left, Dave. I've taken a lot of your time. We're constrained with the one-to-one meetings, but I do want to ask you, we're sitting here, gold's up now $40.
Yeah.
New all-time high. The producers are seeing buying. The GDX is up 4%, I think, last I saw.
Mm-hmm.
Some of the better stage developers are seeing buying, but they're still not breaking out, and it's nowhere close to 52-week highs. And the explorers are absolutely nowhere. 52-week lows, if not still just stuck in the mud.
Sure.
What gives? What gives?
Same thing we've talked about in the last 4 or 5 conversations. So the majors have been consolidating, and I believe that is about at an end. I suppose IM Gold could be acquired, and that wouldn't really be a major consolidation. But the Newmont Gold Corp deals are over. The Agnico Kirkland Lake deals are over. The Barrick Randgold deals are over. I guess you might think that maybe Barrick would take a run at Anglo Gold for the Silicon discovery in Nevada. I mean, that's an incredible discovery, and I think the full magnitude of it has yet to be revealed to the market. And as a result of all of this consolidation, inventory is coming out of the majors, and new projects are not being added. It's all about synergies and integration at the moment, and think about how ironic it is that gold's at $2,500 and Newmont is selling assets, selling Eleanor and selling Musselwhite and Cripple Creek and coffee. It's incredible. So that process is a damper on the equities, and we always discussed that you're going to need tension to come up from the middle of the market. And for a while, when Tahoe was successfully rolling up assets outside of Guatemala, going after the Lakeshore, and they were going to go after Richmont, and they went after Rio Alto, you had your roll-up champion who is creating tension and going after assets that the majors would then have to preventively acquire.
Yeah.
And then Tahoe had Guatemala effectively expropriated, and they became roadkill. Equinox was rolling up assets, and I think that Ross had a great plan to, get to 1 million ounces rapidly there, and unfortunately, the Los Filos asset was impaired by tension with the local community, and frankly, I would say, bad actors in the area. And Ross is a very ethical guy. They won't be pushed around, so they had to park that asset and forego the cash flow from it and deal with the situation in Mexico. So Equinox ceased to be able to be an aggressive roll-up company. And they potentially will be again. So now you're starting to see the green shoots, as they say. Caliber went after Marathon. It wasn't clear that they had the capital base to handle the cost overruns there, but they were able to go to market almost immediately and augment the capital, and now I think that's a champion company. And I think that Goldfields has revealed that they just need to get out of South Africa, and I'm told they're delighted to have paid $2.2 billion worth of cash for Windfall. Yeah. And G Mining took over Reunion, which was an asset that everyone thought that Barrick might be interested in or the Chinese might be interested in. So I think that we're past the threshold. It hasn't taken hold yet, but the tension from the middle, the small companies taking the great assets over, while the majors are sleeping, that's in process. And all of that will result in higher prices for better projects, but it is taking some time.
Patience. Dave, always appreciate our conversations. I can't wait to have another one with you in a couple weeks. I'm very grateful for your time. Your insights are always very valuable for me personally and for the listeners of the podcast. Thank you for your continued support. And honestly, when you get back with the drill program in Finland, let's touch base one more time. Wonderful. And see where those results at.
Great to talk to you, Trevor.
Good to talk to you. Dave Lotan from Aurion Resources, everybody. We're going to be right back. We got a long day ahead of us, so stay tuned. The information presented should not be considered investment advice. Mining Stock Daily and its affiliates are not responsible for any loss arising from any investment decision in connection with the material presented herein. Please do your own research or speak with a licensed financial representative before making any investment decisions.